In this video today, I want to talk to you about a strategy that can allow you to maximize the amount of deduction you can take from a home purchase. In this case, we're talking about an investment interest deduction as opposed to what's called a mortgage interest deduction. Hi, my name is Zach Morris, and this little known strategy can allow you to maximize the amount of deduction that you can take from a home purchase. And here's the way that you're going to do it. But first, I want to give you an example of how a traditional home purchase works. So let's say, for sake of illustration, that we're buying a $2 million home. Okay, so we buy a $2 million home and we put in $400,000. So we put in $400,000, we take out a $1.6 million mortgage, so that's 20%. 20% down, we take out 80% as a mortgage, and we're paying 6%. So at 6% interest, and let's just assume it's an interest-only loan for now. At 6% interest, we're going to pay $96,000 in interest. Every year, we're going to pay $96,000. However, we're only able to deduct $45,000 of that interest. And here's the reason why, is that the way the law currently stands is that the mortgage interest deduction is limited to a mortgage of $750,000. So this strategy is going to work no matter what year, unless the law changes. No matter what year you do it, I would Google at the time of doing it what the maximum mortgage interest deduction is. So this year it's $750,000. It could be indexed for inflation and go up, or the law could change completely and it could go up significantly. So just look for the mortgage interest deduction. But this is how you bypass the mortgage interest deduction. So with the mortgage interest deduction, you're limited to $45,000 worth of mortgage interest deduction in this example. So you're leaving $51,000 worth of interest deduction on the table that you're paying, and you're getting no tax benefit for doing so. So now let's look at another situation where you're actually buying that home with cash. So let's say that you had a liquidity event where you sold your business, or you had to sell a concentrated stock position and you're planning on buying a home with the proceeds, or you're able to sell and raise cash tax efficiently. Of course, you don't want to just raise cash and create a big tax liability to do another tax strategy. That might offset it. So you want to look at the opportunity cost there. And of course, any tax strategy should always be done in conjunction with your CPA or a tax professional, and they're going to be able to guide you through this strategy and how to report it. So you have $2 million cash. You buy that home with $2 million cash and immediately do a cash out refinance. So some banks will allow you to do what's called delayed financing. Delayed financing is another way of saying you're doing a cash out refinance, but they're going to price the mortgage as if it were a new home purchase. So you can ask them about delayed financing. Sometimes they'll call it delayed financing, but they're still going to give you a higher rate because it's a cash out refinance. Either way, you're doing a cash out refinance immediately after purchasing that home. $1.6 million is then taken out from the bank, and it's going to go directly into an investment account. So that $1.6 million goes right from the bank directly into an investment account. And a clear line can be drawn between what those proceeds are being used for. They are clearly being used for investment purposes. That is what's going to allow you to classify the interest that you're paying on that loan as an investment interest deduction as opposed to a mortgage interest deduction. Because interest tracing rules in the IRS says that the loan is classified based on what the proceeds are used for, not what the collateral is. So let me explain that. In a mortgage, you're buying a house and you're using the proceeds to buy the house. So in the first example, you're using that $1.6 million to buy the house because you only put $400,000 down. In the second example, where you're getting an investment interest deduction, you're buying that house with $2 million. So you didn't need the bank then. You bought the house for $2 million, and then you borrowed against the house. The $1.6 million went directly into an investment account, and now you're going to buy stocks and bonds or mutual funds and ETFs that buy the same, and you're going to get a $1.6 million investment interest deduction, and you're going to be able to deduct the entire $96,000 as opposed to only the $45,000 as in the first example. Now, I've gotten the question before, wow, this is a great strategy. Can't I just borrow the money and then I'll buy the house in cash and then I'll pay off the loan and somehow get an investment interest deduction? And the problem with that is that you're then using those proceeds. Remember, we're tracing where those proceeds are being used for. So from the collateral to where the proceeds are going. In that case, the proceeds are going to repay a loan. So let's say, for sake of example, that you had to borrow $500,000 in order to buy the house for $2 million. And then you do a cash out refinance and you get 1.6. Well, in that case, you're going to have to use that first $500,000 to repay that loan, right? So that $500,000 is going to be used as debt repayment, not for investment purposes. Then the rest of the 1.1 million would be used for investment purposes and could be classified as an investment interest deduction. One other thing to keep in mind is that once that money's in the account, if you take that money out of the account to buy, let's say, a car, then those proceeds are no longer being used for investment purposes. So to purchase that car, the amount that you use to purchase that car then has to be backed out of the proceeds that we're getting the investment interest deduction. And so this is all something that you'd want to notify your CPA to make sure everything's being reported properly. If you've enjoyed this video, please subscribe and give us a thumbs up below. And please be on the lookout for more videos from this channel. Thank you.